What's going on, awesome people of YouTube? In today's video, I'm going to show you how I turned over $29,000 just this morning in 2 single trades. If you take a look here on my screen, I've had 4 trades so far today, which equates to over $29,347, which you can see over here. If I refresh this on my phone, this is my live account and my live earnings, which then these earnings are EFT'd straight to my bank account. In today's video, I'm going to show you exactly how I identify these kind of trades, how I can catch sharp entries just like this over here, how you can do the same and become a profitable trader by following the footsteps of institutions and banks that are placing billions and millions of dollars in buys and sell positions. As if you've not heard of institutional concepts before, you need to understand that 90% of the markets are moved by banks and big financial institutions spending and buying millions and billions of dollars of buy and sell positions on the various different markets. In today's video, I'm going to show you exactly how you can go and catch these trades and become a profitable trader. Let's get straight into it. Hey, what's going on, awesome people of YouTube? Jay here, your no BS South African online entrepreneur and coach and trader, documenting my journey on my YouTube channel on various ways that I use to make money online. This morning, I had my biggest trade of the month so far, which equated to just over $20,000 profit, in total of $29,000 profit 2 days so far. But I do need to add the disclaimer, I do trade with quite a large account. So obviously for some of you trading with smaller $100 to $200 accounts, it's not like you'll be seeing these kind of returns in a single day. However, you can still turn over sustainable amounts off your trading account using the strategy, because the exact same rules apply. Just because my account is bigger doesn't mean this doesn't apply. So how we're going to go about this is, the first thing I'm going to do is I'm going to come over to TradingView over here. You'll see I had a whole backtesting session this entire morning where I backtested my strategy on various different charts. And I calculated an 18 out of 20 win trades, which was about a 90% win rate. So in today's video, I'm going to reveal that exact strategy to you and how you can go and get started. So over here right now, I'm on the gold spot versus dollar pair over here. I mostly trade US 30, which is Dow Jones. I also trade a lot of NASDAQ, and I also trade a lot of gold, XAU USD. Those are my 3 markets that I focus on, as I love the returns that you can get from those markets. But in order to go and get started the strategy, the first thing I'll do is I'll come over to a chart of interest. Let's use Dow Jones or US 30 for today's video. I will come over to the 2-hour chart just to get an idea of where we are in the market. So over here, you can see we are in quite a bearish market in the higher time frame. We are forming lower highs and higher lows, lower highs and lower lows, lower highs and lower lows. So we could still expect some movement like this in the market. So understanding your overall structure, your overall bias of the market is important to know while trading on the lower time frame, simply because, well, in a bearish market, you want to look for more shorts than long positions. Hence why you will see most of the trades that I've been taking on this market have been short positions, 1 or 2 excellent buys, but because I understand my bias of the market, I'm mostly looking for sell opportunities. Moving on to the most important parts of this video and catching trades like this and how I achieve these kind of profits this morning is identifying the zones in the market where the banks are selling off very heavy and are buying into the market very heavy, so that we can identify those areas and look for trade confirmation entries. So that we go and call supply and demand zones. More importantly, they need to be unmitigated, as when a supply or demand zone forms, which I'm going to go over in a bit, price always needs to fulfill that zone where the banks bought and sold hard. For example, if you take a look over here, this small little blue candle or a green candle on some people's charts will count as a supply zone simply because it was the last up move before a big down move that completely broke this structure. That means the banks and big financial institutions sold off very hard on Dow Jones, leaving this area of interest for us to go and look for sells. Same thing with these areas over here. This black candle or red candle on most people's charts was the last down move before a big up move that broke structure completely over here, which means banks and financial institutions bought very hard. Now, if you go and have a look on your chart, you will see that you will find a lot of demand zones. Like I've got 1, 2, 3 over here. There's another one over here, but I didn't count this one simply because it wasn't the last down move that broke structure. This was the last down move over here that broke structure. Hence why the market didn't have much power on this demand zone. It resisted slightly off of it, but then broke straight through it. There's another unmitigated supply zone over here, which was the last up move before a big down move that broke structure, which includes in this entire schematic. So now that we've got our zones marked out, these are our areas of interest that we will go and look to place our trades. Now, one thing that I want you to understand, and one thing that a lot of traders struggle with, is emotions, revenge trading, forcing trades. The best way to go about trading is to develop a system for yourself from everything that you've learned, whether you've taken some kind of mentorship, whether you've learned retail concepts or SMC concepts. It's important to build a system around what you've learned for yourself and only trade according to that system. There have been times where I haven't had trades for days simply because no trades were valid for my system, and I'm completely happy with not having a trade at all compared to forcing trades. That's going to lead us to point number 3 in this trading strategy. First of all, we can't just go and trade supply and demand zones. There are plenty of times where the market can go straight through demand and supply zones. A very good example is this supply zone over here, which the market just completely went straight through. So you can't just go and trade supply and demand zones as they is. We need some kind of entry confirmation, which I've designed a tool for you guys over here. This is a private tool, but I'm going to give the entire code to you guys in this tool. So if I go and add this indicator to my chart, it's called Supply and Demand Zone Multi-Time Frame, completely free. This is how the strategy will work. So on the 2-hour time frame, we have our supply and demand zones that we have marked out. This tool will also highlight supply and demand zones for you. Now, what you want to do is you want to come over to the 5-minute time frame. And when the market gets into our point of interest, for example, this demand zone or this demand zone here, you want to go and look for buys. And we are going to use our tool over here, the supply and demand zone multi-time frame, for our confirmation entry. So if I come over to replay charts over here, let me just replay the chart to this point. Let me just remove these trades. And I come over to 2-hour time frame. You can see we are busy entering a supply zone over here. So we naturally at this point in time want to look for short positions. So over here, we're going to enable our indicator on the 120-minute or the 2-hour time frame of the supply and demand zone. Let your chart play. And as soon as a supply zone forms, go and take your short position, which you want to put at a 1-to-2 risk to reward ratio. This move being about 1,500 pips, and you want to open 2 sell positions. One with a TP at halfway, 1-to-1 risk to reward, and then one with a take profit at 1-to-2 RR. How this works is when the trade runs and you tap into BE like that, and you tap into TP1, you want to set your second position to break even stop loss, so it's a risk-free and guaranteed profitable trade. As you can see over here, this trade went straight to TP2, so this would have been 2 TP hits. You can then leave this trade over here and document that as is, and we can keep on running this market, looking for potential entries. We've had another supply zone form, which is another entry confirmation. Again, take a 1-to-2 risk to reward with TP1 and break even stop loss at halfway. We can then let this trade run. So this trade would have tapped into TP1 and went straight to break even. So over here, we only would have had a TP1, which was still an 800 pip trade. This move over here was 800 pips. So we again can document this trade over here. Again, we can let this market run some more. We've had another supply zone pop up, which is our confirmation entry. Place your short position, set your position to a 1-to-2 risk to reward with a TP1 and break even stop loss at 1-to-1, and let your trade run. So this trade's hit BE. Okay, this trade went straight to TP2. So we can leave this over here and document this trade as a win. And just to show you this works on any markets, if I come over to XAU USD, you will see these are two trades I had today. I had a short position early this morning at about 11 o'clock, which went straight to TP2, and an awesome buy position about 10 minutes ago, which also went straight to TP2. But if I come over to the replay charts and I just come back to a random point, take a look at this. We want to just let our chart run. As you can see over here, another demand zone has popped up, so we can go and place our long position with the 1 to 2 risk to reward ratio and go and place your TP1 and BE stop loss for position 2 at halfway. And let's take a look where we get to. Okay, so over here you can see we tapped into TP1, we never hit TP2, and it came straight back to BE. So this would have been a TP1 trade, which is still an extremely profitable trade. So again, we can go and let this run some more. We've had a supply zone pop up, which is our entry confirmation. We place our short position, take a 1 to 2, and repeat the same process. Halfway being TP1 and TP2 and BE stop loss. So let's go and let this run. Okay, so we've now hit BE, break even stop loss, risk-free trade. Let's see where we get to. Did that tap in? Okay, it did. And that went straight to TP2. So this would have been a TP1 and a TP2 trade, which we can document over here and leave on our chart while we are busy backtesting. And specifically how I made over $20,000 this morning was the short position over here. I had an orange block pop up here, which eventually actually went away, which I entered over here. We nearly went to stop loss, and overnight it completely dived straight to TP2. This move alone was close, or just over 3,000 pips. So on 2-1 lot sizes, which was BE and partials at halfway, which I closed over here, which was about $10,000, and we went straight to TP2, which was about $17,000 on TP2, which I closed as well, which is how this is equated to about a $27,000 trade. So what I'm going to do is I'm going to give you an entire 35-minute free webinar on YouTube, completely free for you to watch. There's no upsell to some crazy $2,000 trading course. It's all free value on YouTube over here, which goes over exactly how I identify my supply and demand zones on multi-time frames, how I find my entry criteria with a distribution and accumulation method that the banks and big financial institutions use called Wyckoff, and how I identify my overall bias with overall institutional structure on a higher and a lower time frame. On the screen over here, you will find my 35-minute video on YouTube completely for free, which is a free 35-minute webinar, which will go over this entire process. What I recommend is just go and click on this video over here, and I'll see you over there.